Hello, everybody. Welcome to XM Live Trading Session in the beginner's room for Wave Trading course with me. My name is Junaid Vahid. I'm a full-time trader. Started trading back in 2011. Full-time since then. No breaks, no day off. It's a hobby that continues for 15th year. My trading style is price action, intraday, and swing trading. I use fundamentals, price action, and sentiment in my analysis. The more information I get, the better is the trading decisions. I like systematic approach. I like to know what I'm doing. I like to know why I'm doing it. I do put huge weight to the risk management. I know that I am not so much trader than risk management, so I rather manage my risk and then start doing the trading part. So the risk management is the most important thing. But in order to be able to manage the risk, we need to do a lot other jobs to do it in a good way. And one of this is to have an edge, to have a trading strategy, to know where the money flow goes and what to follow in the markets. So we have higher probability, which reduces directly the directional risk. And when we have this decrease in the directional risk, so-called high probability in one of the direction of the market, then we gain confidence and looking for an entry strategies to ride that expected waves. So wave trading course is designed for that, to know where you are in the big picture, to find the patterns within the big picture so you can trade with them, and to see that in the markets in different ways, different angles, and watch this, understand more in details the impulsive and corrective wave cycles, um, and learn all of these wave patterns. Because in reality, actually, in simple terms, the waves are 8 in simple terms. You have 5 waves in the direction of the trend and 3 waves against the trend. That's everything that we need to know about the trend based on the basic things. And the 3 waves against the trend are not necessarily counter the trend move. They could be sideways. They are just not in the direction of the trend. They are sideways or downside. Okay, so very important information that we need to learn is that this is the trend. Okay, higher highs, higher lows, and corrections that we know market moves in impulsive and corrective waves. So impulse, pullback, impulse, correction, impulse, correction. So if we have impulse and pullback forming in a bullish trend, the correction of the bullish trend comes with, again, counter the moves that are not in the direction of the trend, which makes sense. Okay, when this ends, something else starts. And what is that something else? If the direction so far was bullish, then something that it's not bullish, something that is not going upward. But which is that? Why the corrective cycles are more complicated and more difficult for every single trader? Because the trending direction, it's only one. Okay, we have only one trending direction, but we have two correcting directions. It could be pullback, counter trend, and it could be sideways. Not downside, but sideways. So our job as a traders are basically to recognize the patterns that are forming that can guide us based on historical formation and action, what potentially is happening and might happen with the market. I say potentially might happen. That's very important. Not what is gonna happen. Because what is going to happen means that we have high confidence that something is going to happen as our expectations based on our analysis. But what might going to happen means that based on the information we have, the probabilities our expectations to happen are higher than goes in the other direction. So we work with probabilities, and we are not trying to um, guess 100% what's going to be the future, because as I had guess, it's guessing. That's very important. I always try to put it in that basics and simple way. The more I say it, the more times I say it during all the sessions, the the, the more you will really master it, because you're gonna hear it every time. So you're gonna say, "Oh, again, yeah, we understand it, we know it." Yeah, that's why, because we keep repeating it. Okay, that's very important. Wave trading, it's giving us all the details of the market action like an endless pattern. If we manage to recognize in which phase of the pattern we are, that's going to help us a lot to know in which on where we are in the big picture, so what we could expect next from the market, so we can prepare for that, which helps us to reduce also the risks. um, the Elliott waves are not the only way to analyze the trend. It's kind of my favorite way, because of the nature of my trading and the importance of the information I need in order to increase the profitability, the probability in my trading. It's usually my successful, I will say, my first aha big moment started with candlesticks. Okay, candlesticks are was probably the most important information for me when I learned them, because of the nature of the price action indicator, what information the candlestick is giving me. It gives me everything that I need for the single session. And that actually brought the aha moment in my trading, because I was trying to read the markets. People were talking about trends, reading the markets. I'm like, wow, that's crazy. I mean, there is something that is going on, but how you can read them? Whenever I learned the Eastern technique of candlesticks, I was like, so that was really great information that helps me to really understand the exact moment of sentiment changing on the market. A lot of information we start learning. Then the more I deep dove into those price action, the more I found out that it can't work so greatly without the smart money concept, which is the trend. The trend is basically what is being created from the smart money. Smart money are the institutionals, the large capitals that inflows into the market and creates those massive trends. And with my price action knowledge, if I manage to find directions of the trend, the patterns that can help me to recognize the reversals, the trend continuationals, simple, complex price action topics, then it would be great. So the more I dove into the price action, the more I actually started to studying help with by getting help from technicals, fundamentals, and everything. But when I combined pure levels, trend analysis, higher highs and higher lows with price action, with candlesticks, that was really completely shift in my trading career in the beginning. So then it become really, really great. Then I start having new questions. Why the trends are not consistent with higher highs, higher lows all the time? Why sometimes we have higher highs and the lows are getting complex, multiple lows against the trend, then goes up, zigzags and things like this that were not very clear to me how that happens. And I was wondering if there is something that can help me to define those moments and understand them. Then the moment of the it was in the forex market where I saw that trend ends. Somebody told me that trend never ends. You follow it until forever. And I'm like, okay, that's easy. And then I saw that trend ended. You know, how did I anticipate it in the buy trade, in the bullish trend on the dollar yen? No, on the sterling yen, and never came back. They said that the trend never ends. And I just bought because it was very good bullish trend rising with price action. It just didn't put a stop loss because I thought that trend always goes up because they told me trend never end. Trade like it will never end. And I said, okay, let's click it and end it. And also ended my account. It was like trend ended, ending the trend ended my account. It was very, very painful. And I'm like, something is going on here that I don't understand. I take it too much by heart. I need to understand the psychology behind those movement and how exactly they work. And the mistake was not so much price action, it was mostly risk management, because price action helps you to reduce your risks. And then what happened? I started studying charts one by one, spent literally 16, 17 hours in front of the screen trying to solve the markets. And I found out that when I trade in the direction of the trend with three impulsive moves, the fourth one often don't work. Or if it works, it's short term. The fifth one, like after the third major impulse, things starts choppy and following the market becomes difficult. Trend and it's coming. Market slows down its momentum, the behavior it's changing, and I'm like, something is going on. So I started to create some my own rules, which I was thinking that only I know those things. And then I came across, luckily, with Elliott waves. Actually, it was entire theory in all the details that explain everything related trend. All the questions that I was having for the trends, all the patterns, I actually answered the questions thanks to Elliott waves. That's why I decided to start studying them, and it's been like a decade already. Keep studying them and really enjoying. The more you enjoy, the more you study, the more you enjoy. These Elliott waves are not like simple things that you can learn today and you can get bored in next week. Elliott waves are quite complex. They are so different. When you learn the simple theory, it sounds like logical and easy, but when you start counting them, you really get exhausted. You really get losing yourself in the charts. You are losing in which wave you are. So it requires a really nice focus, and actually, it's quite enjoyable. And then you keep study, and you become really good in that. You understand Elliott waves very, very well. And if you are using them in combination with classic chart patterns and advanced chart patterns and price action using the best indicator being candlesticks, then you are really jumping into the highest level of price action possible. Of course, other methods that can guide you for good trading, like Wyckoff theory, Dow theory, Gann theory, and any type of theories that Fibo theory and whatever can really help you to become better trader. For me, I structureize my trading. The technical trading of my technical trading is a top-down and bottom-up approach, including candlesticks, classic price action, Eastern candlestick formation, Western price action technique, and Elliott waves. Of course, I do use wave analysis and volume spread analysis theories and so, but I use them as a patterns in my trading system. They are not methods, major methods that takes my. I don't take decisions based on them only. But there are the reversal patterns, the same approach I have on head and shoulder and the accumulation phase. Just I know I respect accumulation phase a lot because it gives me all the details to position myself before um, the price goes up, which doesn't look like any other reversal classic chart pattern, which we did amazing trades on euro dollar thanks to the analysis of Elliott waves, end of the bearish trend, and the beginning of the bullish trend started with a great accumulation phase thanks to Wyckoff recognizing, and market moved up very good. If you remember that, those that were following me, we did an amazing job there. Okay, so that's the quick introduction for what we do, why we do, how we do, for all our friends from YouTube that are watching the session. And if you guys enjoying the price action, wave trading, directly analyzing the markets, you are in the right place. Just the only thing that you need to do is to join our XM Live, both beginners and advanced room, regularly, and keep learning, asking questions. We have active Q&A chat. You can ask, you can share ideas, you can do everything you need for trading. It's kind of use it as a big community of traders and experts sharing knowledge, trading together. It's really great. Okay, so we have already learned a couple of important things last time for wave number one, wave number two, wave number three, how many waves we have on the wave number one, major five and 25 subwaves, 21 subwaves, 13 corrections in the third three major waves, and etc. and etc. and etc. What those five waves means and how we need to look for them, and the corrective waves and everything. Now, very important thing is that I'm receiving a question saying, okay, five waves are one, two that never crosses below number one, three that is often the strongest, four never touches the end of number one, and the fifth goes higher high, which is the last. Advance could be big, could be small, depends on the dynamics. But sometimes it is not at this shape. Is it possible that the motif wave cycle with these five waves here to have different shape than this definition? I say, unfortunately, yes. The shapes can be quite different, and those shapes are coming let me get it here, are coming like this. We can have this pullback like this. This is going to be the view of five waves up. And the fifth wave will be up here. Let's say here. The fifth wave itself, it's coming with five subwaves that are called diagonal waves. They are not in the extended impulsive move rally. They are in diagonals that are crossing each other and not fitting those basic rules. Okay.